Market investors, check your seatbelts. We're about to experience some wild turbulence. The ride from here could get a lot bumpier after the Dow registered its worst day loss on June 26. Over the past week, there's been an acceleration of daily rate of new coronavirus cases in several states. It has prompted investors to rethink the upward trend that was roughly 35% higher from their late March lows, and the technology-laden Nasdaq Composite to more than 40% from its recent 2020 nadir. The US recorded more than 45% cases last week, according to data compiled by the Johns Hopkins University. That far exceeded the record of 39,972 cases reported Thursday. It is casting doubt in the upbeat predictions for a speedy economic recovery. For many investors, the outlook for the market starts and ends with the epidemic subsiding, or at least the discovery of credible treatments and vaccines. However, not looking beyond COVID-19 could prove fatal. There are much more factors in play that could shake up the already volatile market. MarketWatch named 5 factors. MarketWatch's Jamie Lee reported that a vaccine may not be immediately ready for the pandemic. COVID-19 has lasting effects on healthcare, medical processes, and budget. The money being spent now to treat COVID-19 patients needs to be recuperated. Further, new technologies need to be developed to detect the next big virus. Number 2, the unemployment recovery. MarketWatch warned that a full recovery in jobs could take years to return to pre-coronavirus levels. Ryan Detrick, a senior market strategist at LPL Financial, said that as good as the recent economic data has been, it could still take years for the economy to fully come back. He notes that during the 10 recessions since 1950, it took an average of 30 months for lost jobs to recover, and none of the recessions saw labor markets declines of the magnitude or the severity of this recession. Number 3, reallocation of funds. Investors use different allocation models to balance their portfolio, but with the political unrest and economic collapse, investors are moving away from traditional strategies. This could shock the market. As a result, we might see the temporary and most volatile S&P stock evaluation that we've ever seen. Number 4, the next stimulus might never happen. It doesn't look good for the next stimulus. With the unemployment rate still rising, people have no money to spend. That's a stalled economy right there. And number 5, Joe Biden's lead in the presidential polls. Different polls are all showing Joe Biden's lead. Regardless of the authenticity of the figures, its economic effects are real. Biden has said he would raise the corporate tax rate to 28%, rolling back Trump's 2017 corporate tax returns. A report from Goldman Sachs estimates that such an outcome would shift the 2021 earnings per share for the S&P 500 to $150 to $170, a significant pullback. To some market players, everyone's selling means they need to buy. We're not saying it's the wrong strategy. Basically what we're saying is you have to have a safety net, and it have to be strong enough to absorb a hard impact, because we are in brand new territory with the stock market. You're interested in precious metals, but you don't know where to start. Our commitment here at Noble Gold is we pride ourselves on education. We pride ourselves on giving a lot of information and getting people the right kind of education on what we do. We have hundreds of free guides. We have teams of people that will answer any question that you may have, and we're really here to help in a no pressure environment. So if you want to learn how you can acquire some precious metals or just get some information for free, contact and look up noblegoldinvestments.com.